Hello and welcome to FTSE Funds and Finance, the straight talking podcast brought to you by Goodwin Financial Services. I'm joined once again by financial advisors Steve Goodwin and Josh Goodwin. How are we doing, gentlemen?
Good morning. We're all struggling apart from Josh, we're struggling to get over this bug we've all got, but we're here and we're firing on not all cylinders, but some cylinders.
You're the only one that hasn't got a cough and a cold and
never felt better.
Okay, so quite a short podcast today, but we're just going to touch on the market and the autumn statement. So, Steve, what's the outlook been for the week for the world markets over the last week or so?
Well, markets are continuing to move in positive trajectory. The big move has been bonds, to be honest. The bonds have really surged since Sunak came into power. We had the bonds have been in crisis all year, and the defensive positions that a lot of clients take with using bonds as a protectionism has not worked this year because bonds have gone into freefall. But what we're now seeing is a lot of funds are buying the UK bonds because they're probably oversold and cheap. So we are seeing the bonds move upwards. The world markets are still trying to move positively against a backdrop of the American Fed continuing to spout that it's going to be worse than you think. Don't worry, we're coming with higher rate rises. So that rhetoric is continuing. And the other thing that's acted yesterday, we're recording this on Tuesday, was the China lockdown has caused a problem in that people are concerned, obviously the people protesting on the streets, that the zero COVID policy is going to really stall their economy. So they are the two things that are sort of trying to push down against the surge, which is the China situation and the American Fed, who continue to give very big negative rhetoric. But apart from that, and in spite of that, we have seen week-on-week growth now for quite a period of time, and month figures are great. And a lot of 6-month figures have now become positive because we've had a little surge in July, August, and a big surge in October, which is what we predicted. So people are seeing that as we sit here today, that if they're in the right assets, that they're off the bottom of the market and surging forward. So, at the moment, I still maintain what I maintained in February, March, and I'll just reiterate it again without being too boring, that I felt that the first 9 months of this year would be testing, and I then think that the next 9 months, as in October through to next June, July, are going to be positive. And I think the first 6 to 7 months of next year, hopefully, will be the driving force that will record a positive growth once again in the third year of an American presidency. So still positive, but with obviously some negative things holding over the market. China is the major one, and the American Fed needs to calm the rhetoric down. But apart from that, we're quite positive in how things are going.
And Josh, do you think it's Sunak is coming, and is it the policies that he's brought in, or just more of his stability that's brought some of this growth back to the market?
Yeah, Sunak, has definitely helped. The thing that throws me a little bit, we feel like we've gone around the full circle. We've gone back to more towards Cameron Osborne economics, which people for years are saying it doesn't work. Now we're reverting back to that to try and get the markets more confident again, but take that how you will. But yeah, to be honest, he's what we need at this time, and sometimes you need certain type of leaders at certain times, and I think Sunak and Hunter are exactly what we need at the moment.
And there's still obviously a few things going on. The war in Ukraine is still going on. Obviously, the energy cap in April, there's still a few things on the horizon that could cause some issues. But talking of Sunak and the policies brought in, it released the autumn statement just recently. Now, some of this may already seen this, but I just wonder if you can give, the pair of you could give an overview of the autumn statement and the differences that's going to make for people and the average Joe, which is obviously my common thing I come back to.
So the autumn statement was without doubt not good news for most people and most people's pockets, but the whole point of the autumn statement was to calm everything down, was to reassure the markets there is an economic policy, and to raise money. Now, we can all have our personal individual viewpoints, whether you're extreme right wing or you're extreme left wing, you'll have differing views on what they're doing. And, we cannot, this is not to argue politically, we're just talking economically. So there are things that are done, I will just cover them, that for some people is an issue and for others isn't. I think that long term these sort of policies work? No. But as Josh said, Winston Churchill wasn't exactly the best leader in the world, but he was perfect for what was needed in the Second World War.
Yeah,
just
sure.
as Sunak is perfect for today. But Sunak Hunt, if you think that they'll be brilliant for the next 5, 6, 7 years, adopting these sort of policies, I would say definitely not. Mm-hmm. Let's look at some of the things that they've done. Now, the first thing that's a little bit contentious to those on the right wing is giving the inflation-busting deal to pensioners and to people on benefits. Now, the reason that the right wing have a problem with that is the argument is that it encourages people not to work, and it's also giving a big boost to a lot of pensioners who have a lot of money anyway. Now, we do accept there are poor people on benefits. We do accept that there are pensioners that are poor. Nobody's saying that. But there is now a situation where if you are working, you're getting heavy tax rises imposed upon you. You're not able to get big pay rises generally because firms can't afford to give it. So as a worker, you're suffering a massive pay loss. But if you're not working, you're getting an inflation-busting pay. And there's an issue for those who look at politics from a growth aspect and the right wing to do that. That is, without doubt, a very much a left-wing policy installed by a conservative government. So there are issues in some quarters with that.
Can I just, do you think that solves some of the problem though? Obviously we've got a financial black hole that needs to be plugged, and that's obviously what these policies are about. Do you think that this policy in the short term is the right policy?
For me personally, no. I think we should always look after the poorest in society, but because somebody is on benefit per se, whether it be state pension, which isn't really a benefit, or some of the other benefits, that doesn't make you the poorest in society. You know full well, we know examples of people that are on benefits but are living a life far better than people who are working.
However, that is still a small percentage of.
Yes, no, I accept that.
And you also got to remember the fact that if they try to segregate it and try and make it enforceable, it's not really workable.
And hence the
it's a blanket approach, isn't it?
Hence the problem they've got. So the problem that they have is, for a temporary basis, they have to look after the poorest in society. But by looking after the poorest in society, you're also giving people that don't need the money.
Sure.
So you can't police it. But again, it's very much what I'm trying to say is it's very much a left of centre policy rather than one that you'd expect the Conservatives to do.
Yeah.
And the second thing that they've done, and I was expecting them to touch dividends. I thought they may try and equalise dividend tax with income tax. But what they've done is slashed the amount that people can earn in dividends, which is a tax. It's another tax on the workers. In that, we've got to remember that people that earn dividends tend to be those with portfolios. So those that have saved money and investing money, that's now going to be damaged by the taxation that they're imposing. And those people that have limited companies and take dividends out of their companies, they now can take a lot less before they are.
So can I just put some figures? So the dividends allowance was £2,000 as it is at the moment per person you could draw up before you pay tax on the dividends. They've now, from 2023, it goes down to 1,000, is that correct? And then
Correct.
from 2024 it goes down to £500. So that's the difference, as in they're now going to be paying tax much earlier effectively.
Yeah, so again, that's for those that have money invested, they're going to pay more tax. And the
Capital gains tax allowance,
which at the moment is 12,300 a person, goes down to 6,000 next year, and then 3,000 the year after. So, you are at a situation now where it's a big difference. So it means that when you make a gain now, you're going to pay tax earlier. So that's going to affect buy-to-let landlords.
So that's capital gains tax and the dividends allowance.
So both of those taxations, capital gains and dividends, are are going to hit people. Now, the argument is, well, it's only hitting those who have something. But once again, it is another tax on those that are either working or that have created wealth to invest. So again, not everybody that is super rich have dividends. Not everybody, if you make a gain on your second property, it may be that that's how you're planning to live in retirement. Now you've got further taxations to pay on a property, which people have done to try and create wealth for themselves and earn. So again, it's another taxation on those who have.
And do we think it's going to solve some of the issues? So obviously, as we said before, this is a short-term policy, effectively. And do you expect this is going to run on? Obviously, he's got an election coming up in 2 and a bit years. Do we think he's...
Well, he's not getting elected on that statement. Let me tell you that. The inheritance tax has been frozen, so people are going to pay inheritance tax because, in effect, the levels that they've got, they're freezing for 5 years. So that means, in reality, allowing for inflation, that's another tax.
It's a stealth tax, effectively.
It's a stealth tax. The tax threshold.
Can we just touch on that? Because people might not know. Josh, the stealth tax, people hear that all the time, but might not necessarily know what that means. Can you just give us a layman's terms, if you can, about what a stealth tax is?
It's a tax that's done stealthily. So yeah, it's just effectively tax rises that are dressed up slightly differently, as you say, freezing the personal allowance. It's a stealth tax in the fact that if that's not going to rise with inflation or wages, in real terms you're paying more tax than you were before. But it's not a direct tax rise like bringing your 20% up to 25% or lowering the tax thresholds. They're doing it in a way that doesn't generate headlines but does generate more money long term for the Treasury.
And so that's basically how you said it. Yeah, they freeze the personal allowance, therefore wages go up over time. So therefore you're paying tax earlier, effectively, on the money.
Exactly.
But okay, Steve. So in terms of that, is there anything else that came out in the Altman statement that people should be aware of?
Well, then you've got, for those that earn, you're paying at the 45p rate much earlier now, rather than 150. It's just over 125. So that means that those people that earn 150 are going to be paying an extra 5% taxation on earnings above 125. Now, the view may be, they're earning enough anyway, so they can afford a higher tax break. And again, that's a debate that you can sit here and argue all the time. You can argue for and argue against it. All I'm saying that all of these particular plans here, they're not going to win over Labour voters, and they're definitely alienating Tory voters and Tory MPs. So, again, I go back to the start. Overall, it's what the markets want, and it gives us stability, but they're not electoral winners. But be prepared for the little giveaway and the fact that what they're going to do is say, look how we turn the economy around. Here's some tax breaks back with us. And that will happen pre-election. So this is a game. This is all about dealing with them, putting out the medicine now to enable them to give something back and make it look like they're going to give something back. But these taxes are hard, and they are continuous, and they are literally going to have an effect on people's standard of living.
So although we think it's going to bring stability to the markets, we think it's going to be hard on the average Joe because of more taxes,
for sure,
etc., thing like that. So there is still the winter of discontent we've talked about before. I know obviously that was an old thing from the past, but effectively it's still going to be very hard for people going forward. Is there anything that anyone watching this can do, Steve? Is it the same as what we said before? Try and cut your cloth a little bit over the coming months?
Yeah, for sure. It's, if you've got a financial advisor and you want, go to them and get some help, because budget planning is essential. When I help people with budgets over the years, I am able to save so much money for them by just looking at their overheads, what they spend on, and, silly little things that they could think, well, that doesn't need to be spent, or you could change that to that and save money. So budget planning, budget analysis, help from a financial advisor will help. But I'll tell you one thing, just a caveat. It's interesting that they've got no money, but they're spending an extra £79 million on a force to go out and grab extra taxes off people, because they're beefing up the HMRC, and they think, the idea being that they're going to go to attack tax evasion and fraud, and they reckon they're going to bring in another 725 million by spending the extra.
Yeah, the
79
US
million.
have done something similar this year as well. They've announced a lot more tax inspectors to try and generate a lot more tax revenue.
Okay, that's interesting. So just to touch a little bit more on that. So the HMRC are being beefed up, more people being employed effectively to try and
Yeah,
catch-
and our friends across the pond doing the same thing. So yeah, it's the smart. For me, that's the first place you should always go for tax, is ones that are evading it.
And do you know what? And do you know what it says though in the wording? The 79 million is being spent to address wealthy taxpayers. So they're not going for the average electrician. They're going for the big boys, the ones with the money.
And that's what it should be.
Yeah, because they're the ones that are evading most of the tax. So that's actually a good. I like that. I think it's a really good thing.
Yeah, it's
to
needed
do.
beefing up for a little while, HMRC. I think that's a good move.
Yeah, for sure. So that hopefully will help to bring some revenue in, but they've still got all the problems that they have with the migrant crisis and all of this to address, which is costing a lot of money. And they've got to address immigration. They've got so much to address if they've got any chance of getting anywhere near being elected, which at the moment I would say is long odds on. I think it's a 2-year tenure for Sunak until Starmer comes and takes over, I think, as we stand.
Okay, well, I think that wraps up most of what we've got to cover this week for the autumn statement. As Steve and Josh have said before, if you do need a financial advisor, if you do need to budget planning, as Steve has mentioned before, then please get in contact. Especially, we touched on it a few weeks ago as well, if your mortgage is coming up to renewal next year, it's really important you get that looked at with mortgage rates the way they are. But please, gentlemen, thank you very much, and we'll look forward to catching you next week. We'll bring you the latest edition and the latest market news.